Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino. Joining me for the segment, we have James Lee, Head of Global Business at Must Asset Management. He joins me to discuss the investment outlook on Korea and the types of solutions Must offers to investors. James, it's great to have you with us. Welcome to Trade Talks. Provide us some background on Must Asset Management. Who are the types of customers that you serve?
Hi, Jill. First of all, thanks for having us. We are a long-only equity fund based in Seoul, Korea. We were founded in 2006. We have one of the longest track records in the Korean hedge fund industry. And over the last 16 years, we've generated annualized gross return of about 20%. During the same period, the benchmark Kospi did about 4.5%. So we've done meaningfully better. While we invest around the world, our core expertise is the Korean market, where we've done 24% annualized gross return. So we've done exceptionally well in Korea. Right now, our customers are mostly 80% retail Koreans and 20% institutions. We are trying to broaden that outside Korea.
Yeah. And James, it's been a significant time in your region of the world. What is your investment outlook on Korea, and how has the current political environment affected your perspective?
Yeah, so we think that Korea is actually going through a very important inflection point, meaning that the next 5 years is going to be very different from the last decade plus. And the main driver for that change will be the Value Up program, which is a corporate governance reform announced by the government in February of last year. So if you look at Japan, they had their own corporate governance reforms in the past. And in recent years, their stock market has been substantially re-rated as a result of those reforms. So the investors are now asking the question, who's next? And we think it's Korea. So starting with the valuation, Korea is really cheap. It's trading at less than 8.5 times earnings, and it's trading at close to 0.85 times book value. So it's really cheap. While we've had our own political turmoils in recent months, actually last Friday, President Yoon was impeached. So we are going to have a new election on June 3rd. The main point here is that the Value program is a bipartisan initiative, meaning that both parties want it. So regardless of what happens to the election, this initiative will go on. We need to have two major changes under the Value program for us to see like Japan-like market re-rating. The first change will be on the board of directors fiduciary duty. Right now in Korea, board of directors fiduciary duty is to the company itself, and it does not include shareholders. So we need to add shareholders to the fiduciary duty. So that's going to be a big change, number one. And second change will be on the inheritance tax rate. Korea has one of the highest inheritance tax rate in the world. It can get up to 60% plus. So what it leads to is that business owners in Korea, they don't want their share price to rise because higher stock price means higher tax burden when it comes to inheriting their shares to their children. So it's causing a very unhealthy misalignment between shareholders and management. So we need to fix that. So once we have those two changes happen, a lot of good things will happen in the Korean market over the next 3 to 5 years.
Mm-hmm. So James, with that backdrop, what's your investment philosophy and what kind of investment solutions does Must offer?
So we are fundamentally value oriented, but we don't buy things just because it's cheap. Because we've been trained in the Korean market where more than 25% of the listed stocks are trading at less than 1 times book value. So we know for a fact that cheap doesn't mean that it's attractive. So we would like to invest in companies that fall into three buckets. The first one is companies with long-term compounding potential. Second is we like companies where we can engage with management to create shareholder value, so meaning shareholder activism. And last bucket is we like companies selling, basically growing outside Korea, also known as K-trends, like K-beauty, K-pop, K-food. We don't think that K-trend is a fad. It's actually a mega trend that's going to be around for the next 10 plus years. So we like those three ideas. And in terms of the product offering, our Korea-only strategy, which invests 100% into the Korean market, would be most relevant to the viewers.
Yeah, well, I'm a big consumer of the K-beauty trend, especially as it applies to makeup. So keep bringing the innovation on. So with that, how are you differentiated from other investment managers in Korea?
That's a great question because I really think that we are really unique and much differentiated. And I want to highlight 3 points on that. So number one is we have a very strong alignment of interest with our clients. So 18% of our AUM, which stands at $500 million, is our company's founders and employees' capital. In fact, almost 100% of our company's capital, our founders' net worth, are invested in our funds. So our entire net worth is on the line. And second point is collaboration is a very important part of our investment process. So for example, when we do our research, instead of having one analyst covering one idea, we have a multiple analysts cooperating on their research on each idea. So the benefit of that is we can minimize the human errors and human biases because each analyst can check on each other's work. And second, each analyst can actually learn a lot from each other's insights and background. So our research tends to be more accurate and more deeper than having one analyst covering one idea. And when it comes to portfolio management, we have the investment committee system where the 7 members get together and makes all the portfolio related decisions as a group. By having this collaborative setup, we can have a more balanced investment decision process and therefore have a more diversified portfolio than having one PM covering one fund. And lastly, we have the global perspective. Even if we are looking at the Korean companies are becoming increasingly global. That you need to understand what's going on around the world. And we do have the global perspective because we've been investing outside Korea for the last 9 years, and we've been researching outside Korea for the last 12 years.
Mm-hmm. And James, to wrap up here, what is your investment advice to your clients?
I would say invest in Korea. That's like a 3 words investment advice. But I know for a fact that most of viewers here haven't looked into Korea before. So I would say take your time learning about the country. And when you're ready to allocate capital, try to look for trusted local managers like us because this market is just a very difficult market for foreigners due to language and culture barriers. So it's a lot better for many different reasons to outsource that to local experts.
All right. Appreciate the insight, James. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you.